Dhiraj, Sachdev, good afternoon. Thank you for joining us. Do you think we have a firm, durable, and a long-term bottom in place?
So good afternoon, Nikunj. So well, what we are witnessing is a kind of markets entering a climax of panic as it is grappling with the fear of economic impact led by coronavirus and whether it could lead to economic slowdown or supply chain disruptions. Given the fact that we have extensive reliance on Chinese production for key intermediate products. Now, such one-off Nikunj events are uncertain and unpredictable, and that is why it leads to kind of a panicky and knee-jerk reaction into the markets in the short term. So while supply chain disruptions can last for a few weeks, the fact is that we are living in an equity market world where the reactions and the corrections are sharp, swift, but short-lived. And why I'm saying so is because of the fact that thanks to algorithmic trading or leverage positions or ETF selling, it creates a ferocious and high-speed sell-off in the market. Now, the moment market realizes lower number of cases being reported on COVID or containment in few of the countries, I think the markets will find a bottom for an eventual rally, and that is what maybe just around the corner, maybe in the next few days or so. So I would be tempted to buy into such panics as a long-term opportunity. Of course, the leverage traders and they tend to panic, given what we have seen the height of volatility in the last few days, because the history of pandemics clearly show that the markets have sharp correction and a rebound. While we also expect massive government stimulus across global central bankers to aid and contain any kind of a slowdown because of this event. And our sense is that the markets will look beyond sooner or later this temporary event, as the value of many businesses are far higher in terms of their longevity, cash flow generation capability, predictability, and survival than what is quoted price into the market. So obviously we believe some kind of a bottom is made. Maybe over the next few days, not even next few weeks, I would suggest that market is already discounting the most kind of a fear because of this pandemic.
CK, let's go back to a very elementary question. Which is the real market? Pre-10:30, post-10:30. Monday morning, what will welcome us? The first half of the day or the second half of the day?
Well, I think the revival that we saw from 10:30, that is now the real market. What we experienced before that, this sustained decline was, I think, just a reactionary market out of whatever was happening externally. I think the reality is the fact that after 10:30, there has been very aggressive and very sustained buying in the market, which has brought it up like never before. We have seen what 8,300 to 10,100. Never seen that sort of a recovery before. This typically indicates that the market has put in a durable bottom, and therefore going from here, any pullback that you may experience. Today, of course, we are more or less done with the day with an hour to go, but I think in the coming week, if we get any intra-week dips, I think all of them will provide us with a buying opportunity. Market has clearly exhibited that the people who have resources at hand, I think they have been courageous enough to come in and buy and hold on to those positions. They have triggered vast levels of shorts getting covered. I think with all that out of the way, now more of the people will all be looking at today's low prices and ruining their inability to act or their lack of conviction to put in the money when it should have been. So I think moving ahead, the markets will find lots of takers at lower levels. It's only a question of whether you panic quickly on small falls or you have the courage to buy into a deeper fall whenever it happens in the next week. But buy we must. I think durable bottom has been put in.
All right. Kunal, should we get your take as well?
So yeah, I think the markets generally
whether it was in 2008, 2000, or such kind of correction years, we've generally seen double test of bottoms as one of the most stronger tests, and that generally tests the pocket of buyers who've bought in at lower levels, or the ones who are looking to buy as well. So I think that's.
So is it worth looking at levels at this stage or not? Because we were in free fall, we hit one circuit. We were not too far away from that 15% circuit, and where we've stabilized.
So I think the level which we hit today, I think is an important level. So it's not 8299, the low which we made 8,200 approximately, but it's at 8900 approximately where the Nifty started to, or investors started to see some bit of trouble. So I think that's going to be a more or less a test that whether the ones who have bought, see, because anyone who's bought today in the morning, he would not have bought with full gusto. He could probably have bought maybe 1/3 of his expected quantity, and he would have built up as in how the markets gained more confidence. So the average price of the buyer may not be at those 8,300 levels. It would be somewhere closer to 9,000 levels, assuming including all those stocks which one must have bought. So I think in that regards, that test of 9,000 mark is one of the more solid tests, and I think that if it happens, say over the next 1 week, then I believe that we could go through a gradual process of bottom formation. But I think until that time doesn't happen, it's going to be very difficult for the markets to settle into a range. The IVs are still at 50-51. I think that's the more, I would say, concerning part still, because the IVs have to cool off significantly for markets to gain into a decent uptrend. Till the time IVs are above 50-55 levels, the intraday gyrations on the Nifty would be 200-300 points. So those wild swings would keep the traders on tenterhooks.
Okay, Dhiraj, there are two ways I think the medical news would move in next 7 days. I hope I'm wrong with this one. Either it could intensify in Europe, or it could decrease in Europe like China. In both the cases, where do you see markets moving? I hate to connect medical news and markets here, but I'm just doing my job.
Well, Nikunj, if it is contained, obviously the signs are already visible somewhat, though it is too early to say. A few of the countries have started showing early signs of containment. If that happens, obviously you will see a huge rebound, and just like we had this gap down openings, you will have gap up openings. So while you have always asked this question to other participants, whether it's a V-shaped or W-shaped recovery, I think 50% will be V-shaped kind of a recovery, and the market will assess across different businesses what will be the temporary disruptions or impact. The problem will be in some of the companies where the pledging happens and those create kind of a sell-off. Well, if it intensifies, then again you might see some level of volatility and reassessment by the market next week. But suffice to say that the probability of containment beyond this virus spreading beyond a month will be there, and hopefully we believe that, like any other viruses in the past, we should see that the markets rebounding eventually over the next 3 to 6 months. So I think as the market tends to discount fears well in advance of the ground level reality, and this is going to be the same case for this event as well.
Let's just take a look at what actually has led to the recovery. While the Nifty futures are back at that 9,700 mark, the breadth is open in favor of the advances. You've got a Sun Pharma, which was the first to recover actually, so now holding up a good 9%. There's PFC, there's Oro Pharma, which is holding up 11% Idea has made a solid comeback, 27% higher for this one. There's Grasim, and then there's HDFC Life, which is also holding up 9%. There are other names like an MGL, a Tata Power, a BEL, Idea, PNB, which is actually holding up. Kunal, you can't really draw a trend within the gainers today, can you?
No, you can't. And I think it's also impossible as such to figure out a clear-cut trend, because it would be a mix of many strategies which could be going on. So short covering, it could be maybe some bit of weaker hands, or I would not say weaker hands, but less quantity buying into individual stocks, or the stocks which have gone back to deep oversold territories. So it could be a mix of all those strategies, and which is why I think you can't find a durable pattern as such. So in the morning, HDFC was up, I think 10-11%. SBI was up, I think only 4-5%, and then all of a sudden in the middle of the day, you saw a rally where SBI rallied up to, I think, 247 levels, up 14-15% at one point of time. So those patterns are still not clear. Yes, the buyers would chase the stocks which have been doing reasonably well, but they've been available at good discounts. But then there has to be some structured pattern towards it, whether it's favoring towards a certain set of sectors or certain set of stocks, but at least the first leg of rally doesn't give you those kind of clear pictures. So one has to wait for maybe 3-4 days and then try and assess whether the how the volumes and the open interest have shaped up into each individual stocks as well as sectors.
Okay. All right. Fair enough. Dhiraj, we've also got the SBI Cards listing on Monday coming up in a market as heavy as this, amongst other things that we're going to be watching out for. That's going to be a big one. What should we anticipate?
Well, the unofficial premiums on the IPO, given the high interest cost where people subscribe to the IPO, I think that has receded given the market fall. So while it could be on par, possibility is very difficult to estimate what will happen when it gets listed. But the fact is that fundamentally the business is strong. India being a credit-starved economy, I think the credit card culture will only grow. I don't believe that the other digital form of payments disrupts credit card economy, because that only dips into your existing bank account as a debit. So I believe the credit card economy will only grow. The business of SBI Cards generates about 6% ROA, and they have NPS well under control. And given the fact that the growth rates are extremely high, with under penetration in a capital-starved economy like ours, so we believe the business is strong. And as the market sentiment improves, then I think the listing gains or post-listing gains will also accrue to the investors.
Good to have you then, Dhiraj, on the show. Thanks so much for taking the time out.